Good morning. I'm Andy Myers at Weiss Research, and this is your morning market update for Tuesday, November 29th. Stocks on Wall Street and in Europe are holding on to small gains following a huge rally yesterday. Investors around the world remain focused on Brussels, where EU finance ministers are meeting to discuss ways to stop the spread of the sovereign debt crisis. They've reportedly already agreed on new rules for borrowing against the Eurozone bailout fund and intervening in the government bond markets. Despite that optimism, U.S. stocks are backing off of earlier highs following a disappointing report on the real estate market and a high-profile bankruptcy filing. First to the economic data. The S&P Case-Shiller Home Price Index slipped 0.6% in September, a much bigger decline than expected. Over the past year, prices in 20 major U.S. cities have dropped 3.6%. Following the report, the U.S. dollar has reversed course and is now rising against the euro. And gold has backed off its earlier gains, now trading around $1,710 an ounce. Crude oil is also off its earlier highs, but is still holding on to a small advance at around $98.50 a barrel. Turning to corporate news, AMR has filed for bankruptcy protection. The parent of American Airlines and American Eagle said it will reorganize under Chapter 11 in order to reduce labor costs and shed debt. American was the only major airline not to file for bankruptcy during the downturn a few years ago. As a result, it has higher labor costs than its competitors, especially when it comes to pensions. The filing will also allow AMR to renegotiate aircraft leasing contracts. The company says it will continue to operate normally during the process, and that it has more than $4 billion of cash on hand to ensure that it can pay its employees, vendors, and suppliers on time and buy jet fuel. Shares of AMR are halted, but they were down 60% in pre-market trading following the news. Another big stock decliner in early trading is Tiffany & Company, down 10%. The upscale jeweler beat expectations with a 63% increase in fiscal third quarter profit and raised its earnings forecast for the full year. But investors are focusing on Tiffany's outlook for the current holiday quarter, which fell short of estimates. Meanwhile, Transocean is falling nearly 6%. The firm will offer 26 million shares to partially refinance its acquisition of Acre Drilling. And we're also keeping an eye on shares of Apple. It opened lower after Susquehanna Financial Group lowered its production forecast for the iPhone. Analysts say that the flooding in Thailand will cause supply constraints. Susquehanna also cut its outlook for desktop and laptop computers due to a shortage of hard disk drives. And finally, we have news of a possible IPO from one of the biggest names on the internet. According to the Wall Street Journal, Facebook is targeting the first half of next year for an initial public offering of its stock. The social networking firm reportedly wants to raise $10 billion in an IPO that could value Facebook at more than $100 billion. That's the latest from Weiss Research. Have a great trading day.